Now today, we have two industries that are consuming 30% of the world's supply of silver, which didn't exist 10 years ago. So there's this huge deficit of somewhere between 200 and 300 million ounces last year, and that's been going on now for 6 years in a row. Consumption this year, 2024, is expected to be about 1.4 billion ounces. The miners aren't going to produce anymore. Miners are 820, call it. And recycling's not changing much because recycling doesn't pay. There's no money in it. So the deficits continue. So that has to affect price eventually.
According to the Silver Institute, the global silver market is poised to experience a 17% increase in its deficit, projected to reach 215.3 million ounces in 2024. This rise is attributed to a 2% growth in demand, driven primarily by robust industrial consumption, alongside a 1% decline in total supply. KeithNeumeyer, President and CEO of First Majestic Silver Corporation, underscores the persistent deficit in silver supply, with consumption consistently surpassing production for the past 6 years. Despite growing demand, silver recycling remains stagnant due to financial constraints, potentially impacting silver prices in the future. Industrial demand for silver hit a record high in 2023, mainly fueled by increased usage in the solar energy sector. The Silver Institute highlights that the rapid expansion of photovoltaic capacity and the adoption of new generation solar cells have significantly boosted global electrical and electronics demand by 20%. Neumeyer emphasizes the indispensable role of silver in various technological applications, including computers, cell phones, automobiles, and solar panels. With industries consuming 30% of the world's silver supply, driven by the rise of electric cars and solar energy, the demand for silver continues to grow. The Silver Institute projects a 2% increase in silver demand in 2024, with industrial demand expected to hit another all-time high. This forecast indicates the continuation of a structural market deficit for the fourth consecutive year, reaching approximately 215 million ounces. Discussing the dynamics of the silver market, Neumeyer points out the involvement of significant consumers like Sony or Tesla in contracts with banks for silver delivery, which banks leverage in the paper market, impacting spot prices. He suggests that short positions held by banks contribute to the volatility in silver prices. Join us as we delve into KeithNeumeyer's insights. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you.
I love technology, and I guess, being, the founder of a copper company, I learned the importance of, metals in technology. And in the early 2000s, when I was looking at silver, I realized how important it was in the whole scheme of things when it comes to, what we do, whether it's computers or cell phones or automobiles or refrigerators or fridges or pretty well every single device that we need as the human race consumes silver. And I figured that was not going to change. The difference back then was there was no electric cars or solar panels. Now today, we have two industries that are consuming 30% of the world's supply of silver, which didn't exist 10 years ago. So last year, the human race consumed 1.2 billion ounces of silver, and the miners produced 820 million ounces, and only about 100 and some odd 50 million, 125 to 150 million is recycled. So there's this huge deficit of somewhere between 200 and 300 million ounces last year, and that's been going on now for 6 years in a row. Consumption this year, 2024, is expected to be about 1.4 billion ounces. The miners aren't going to produce anymore. Miners are 820, call it. And recycling's not changing much because recycling doesn't pay. There's no money in it. So the deficits continue. So that has to affect price eventually. So like if you're Sony or Tesla or BMW, doesn't really matter who, and you need to have 20 million ounces of silver for your product that you're producing in 2024, you're going to approach the big traders, which is pretty well JP Morgan or HSBC or whoever they are.
Yep.
And you're going to sign a contract for delivery of those ounces, and you're going to tell that bank to deliver those ounces to whatever port that they need to be delivered to. So as a miner, we sell our ounces through a trader to the banks. The banks know how many ounces they're going to be getting because, they know the market quite well. Of course, they leverage those in the paper market because they're shorting against that purchase. So Sony buys 20 million ounces, they leverage that up, 300-400 times in the paper market. And it's in their best interest to not allow that spot price to change that dramatically. Because all of a sudden, and that whole run in 2011 from $40 or, call it, 35, depends on who you listen to, but $40 to $50, that was all short covering. And the banks were in super stress during that period of time. There's talk about, that's why, Bear Stearns, I think it was, or whomever ultimately went bankrupt because of their big paper derivative position on silver. Whether that's true or not, who knows? But, there's lots of information on the internet that you can find, that discusses that topic. There's a big short position in the market, and it's all held by the banks, and it's all because silver is a very commercial market, and it's very thin. And then, so, these guys, and, these are young 30-year-old MBAs out of college that have no clue about, the supply and demand fundamentals of the metal, yet they've been shorting silver for the last 30 years. But, they don't know that the above ground supplies of silver back in the 80s was 5 billion ounces. And back then, there was no electronic uses. Electronic uses just started coming in. Today, the above ground supplies are about 1 billion ounces, and it's all in ETFs. So all that above ground supply has been eaten away in electronics. And and no one's recycling cell phones or computers. All that computer waste is just thrown into dumps.
Reportedly, stocks held in commodity exchange depositories and London vaults declined by 5% last year, equating to nearly 15 months of global supply by the end of 2023. Most of this decrease occurred in China, driven by rapid industrial demand growth of 44%, reshaping local supply-demand dynamics. Spot silver prices, up 18% year-to-date, surged to $29.79 per ounce last week, marking their highest level in over 3 years. This was propelled by a rally in gold prices and strong copper prices. Neumeyer raises concerns about the transparency of silver data, particularly noting restrictions on silver exports in countries like China, which further complicates the understanding of market dynamics. He also sheds light on the significant trading volumes of silver in paper markets, estimating around 320 billion ounces traded annually, a stark contrast to the annual production of 820 million ounces by miners. Let's get back to the interview.
Silver trades 1 billion ounces a day in the paper markets. So we call, let's say there's 320 trading days in a year. So that's 320 billion ounces of silver trade in the paper markets per year. The miners produce 820 million a year. So they leverage, do the math. That's like what, 400 to 1 or something like that. So for us, we're, the leverage is crazy. So that's why we open the mint, because for us to take our production off the market, and you do that math, for us to take 10 million ounces off the market just for easy math, that's equivalent of taking 3 billion ounces out of the paper market.
Yeah.
That's why I criticize the Silver Institute, because when we're not members, I canceled our membership of the Silver Institute a few years ago because I'm so displeased with the data that they publish, because that's a very valid question. I would love to have answers myself. I remember when Putin was in the gold vaults in Russia, when he was holding his gold bar. This is like, I guess, 4 or 5 years ago. And, pretty famous photograph of him inspecting the Russian gold hoards that they've been buying over the last several years. And so he's standing in the vault, and I zoom in on the photograph, and along the back wall, there's this whole line of pallets of silver bars. And I go, wow, there's a lot of silver there. So, and they don't report it. So, is that where the silver's coming from? I have no clue. We know China's not exporting silver. It's against the law in China to export silver. We know in India they're buying silver. They're big consumers. So it's a very valid question, and it's a very secretive industry, and we don't have an answer. And these are numbers that we talk about within the industry that, and they're not exact, but 90% of all silver that's been mined is gone. It's in waste dumps, it's in the ocean, it's gone. 90% of all gold that's been mined is still sitting on the surface in vaults, in hoards, and so on and so forth. So, silver is very much a depleting asset because, in this cell phone, like, my little Apple here, there's about $2 or $3 of silver in this thing. And to take it out, it would cost a fortune because Apple is very good at embedding silver into that circuit board. And there's not too many technologies out there that can extract it in an economical way. So no one, recycles computer waste. And that's where a lot of our silver goes. So it just, gets, put in waste dumps, unfortunately. And that's what happens.
The silver market faces an impending deficit increase, projected to reach 215.3 million ounces in 2024, driven by robust industrial consumption and declining supply. Despite this, the market grapples with challenges like stagnant silver recycling and transparency issues. As silver demand surges, particularly in industries like solar energy and electronics, the market braces for its fourth consecutive year of structural deficit. However, concerns linger regarding the reliability of silver data, exacerbated by restrictions on silver exports in key markets like China. How do you perceive these dynamics shaping the future trajectory of the silver market? Share your thoughts in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.